All right, revolving credit. Tell us about that. Tell us the best way to manage that. Go for it.
So revolving credit, like you said, your credit card debt on your credit report, you never want to get that over 50% balance to limit ratio. The scoring algorithms, whether you're looking at a FICO or a Vantage scoring model, it doesn't matter. Once it gets over that 50% balance to limit, it actually starts to hurt your credit score. Even if you have like 10 years of on-time payments, once it hits that 50% balance to limit ratio, it actually hurts your score. Ideally, you want to keep that account under 10% when it reports to the three credit bureaus. So if you're a borrower, and I hear it all the time, and you do too, Adam, right? People use their credit cards for business. They rack them up, they pay them off at the end of the month, and then they just continue that cycle. Well, what you'll want to do is you'll want to call up your credit card company to see when they actually report to the three credit bureaus to make sure that you actually pay that account before it reports. If you're going to have your credit pulled with Adam for the home loan, you just want to make sure that that card's actually paid down, because if your payment's on the 27th, but they reported your balance on the 20th and it's not paid down, you're going to report that your balance is over 50% balance to limit ratio. If you're doing that thing where you're maxing your cards out and then paying them down on your payment day, it might not reflect that on the credit report. So you can call your credit card company up. All of them are different, right? Some of them report on the 8th of the month, some of them report on the 15th. It just depends on your credit card company, but you can call them up to see when they report. You're always going to want to keep it under 50%. 10% is ideal. And then, like I said, make sure that you pay that before it actually reports to the three bureaus, just to make sure that when you're pulling credit, you know exactly where that balance is. You're not guessing, right? Like, you're not saying like, oh, I had it up to 400 out of 500. Well, that's going to hurt your score, right? You need to have it down around the $50 range, and that's actually going to help your credit score.